Hello, welcome back. We're going to take a look at Rivian Automotive in this video. It is a company that I'm pretty sure a lot of you have thought about potentially holding. And maybe because Amazon got a large stake on that company, you were even more positive towards getting some stake on that as well. But since then, since Amazon got it, they have actually lost a lot of money because of that stake. The company has absolutely tumbled, and today it's down about 15% again because Ford sold 8 million Rivian shares, is what happened here. Now let's take a look at what's going on right now with Rivian. And if you take a look at the stock chart, you will see that it is down 20% right now intraday because of that last Ford sale. And if we take a look at the max chart, you will see that it has been absolutely annihilated over here. 1 year high of 180, near that. And right now it's sitting at $23, so it has absolutely been destroyed. And I wanted to kind of take a look at the company and explain what happens with this sort of like a very, very bullish sentiment companies for no real reason when they come out. Because Rivian, of course, is a very, very new IPO. You can take a look at the company profile here and you will see that it's November 10 last year, basically. It's just a few months, so we barely even have data for this company. And you will kind of see it in the charts as well. We don't have enough data. This is a very, very brand new company pretty much in terms of an IPO. And as you'll see here, the P ratio is negative. Again, we have just a couple of quarters, really a few quarters. And price to free cash flow ratio also negative. A lot of issuance of common shares, of course, because it's the first IPO days. You could kind of expect a little bit of issuance over here. And the 5-year revenue growth, again, it kind of shows us infinite here because of very, very limited data, starting with 0 and right now just having a little bit of revenue pretty much. But we're talking about a company that has a $20 billion market cap. And if we take a look at the financial statements, what are we seeing here? Of course, again, this is just 1 year, very, very new IPO. We don't even have 1 year of data. But you will see that the company is making 55 million in revenue and it's 20 billions in terms of market share. Now, how does that sound to you? We're having a company that has $20 billion of a market share and it's making 50 million. So it's not even making $1 billion and it's extremely expensive, as you can understand. And the net income that it's making, it's absolutely negative as well. So it's losing tons of money. Of course, the balance sheet is also going to be all over the place right now. Still the very beginning of the company. They're getting money from shareholders right now. It was the IPO. It's also the initial offerings after the IPO. And so you're looking at a company that has negative free cash flow as well. And this is a company over here that if you take a look at the stock evaluation tool, you're probably going to burn it because it's just not going to work. We have very, very limited data. It's a 2020 IPO again. So this is the only public sector here. And we have some data from previous years. But it's very, very limited to take a decision about this company. And frankly speaking, company has been losing free cash flow and has been losing net income like crazy. And so what are you going to do with this one? There's basically nothing that you can do. We're talking about a company that has 55 million in revenue. And so even if I go 100% and 120 and 150, let's just say, in terms of revenue growth, and let's just say that the net income margin somehow magically becomes 30, 40, and 50%, free cash flow margin 80, 90, and 100, and then I ask for an annual return of 30%, which was what I typically want to be making, and then I hit calculate here. You will see that even with these insane astronomical projections here that will never happen, of course, in the next 5 years, we are sitting at a high price, highest estimates here of $5.31, and the current price is sitting at 23.10. And imagine this company was 180 at some point. Absolutely insane. That's 100% to do with sentiment. It's about people spending the money for no reason. Spending money for no reason over a company that doesn't make money. And so this is why I really, really urge caution about these kinds of companies. It's a good idea to stay away, like very far away from these kinds of companies, unless they start making some good income, and then it may make some sense over the years to grab a little bit. But as it is right now, I couldn't even see myself entering at $2 or $3 for this in this one, let alone 23 as it is right now. So be very, very careful and vigilant, because especially in this current market where there are no discounts and there's basically only value that is going to stay afloat, it looks like, at least for the few next months, you have to be super careful, because we're looking at a year that will probably have a loss in terms of the S&P 500 and even more the Nasdaq. So be extra careful about buying these companies that are not making money really, because they can really hurt you in the long or short run really, as we're looking at it right now. Remember, this company was sitting at about 180 at some point, and as it's going down, people may be thinking, okay, it's gone down a lot, maybe I should buy now because it will go up at some point. No, but no, this can actually go down even more, and when it reaches single digits, there could potentially even be a reverse split, and then it's back to double digits and then down again. And so don't just be looking at the stock price, it's irrelevant. Look at the business and what it is doing. And right now this business is just very new and shouldn't be trading anywhere near this valuation. This is extremely expensive. And so please be super careful and try to avoid these kinds of companies that are in the very early years and we don't even know if they will become profitable. So be extra careful about owning those. And thank you for watching the video. I hope you enjoyed. Please remember to leave a like and subscribe. And if you are interested in this kind of tool, you can always become a Patreon. You can find the links in the description box below this video. We'd love to have you around, and then you can get access to this tool and use your own projections on all sorts of companies. Thanks for watching again, and I'll see you in the next one. And in the meantime, take a look at this video that I made earlier. And in this one, I'm talking about Palantir and how it's also crashing, about 20% down today again. Looks like we have a 20% discount in the market again today. So thanks for watching again. See you soon. Bye-bye.